Hello, everybody. Welcome to the Trader Merlin Show. It is your Wednesday edition, Hump Day, and we'll call it Holy Earnings Day. Yes, two major companies reporting earnings today. We have Microsoft and Tesla, which we'll be pointing the finger at. Here to help me make sense of it all and to give his perspective on price action and the earnings season, we have none other than Mr. Sam Evans joining us. Sam, good to have you back, my friend.
Always a pleasure to be here. Good. Wow. Time for the roller coaster ride to begin, eh, mate? Here we go.
Yes, here we go. Good. We'll talk about your endeavors here in a little bit, but since our topic du jour is earnings season and price action, I'm going to real quickly show the viewers what was cooking out there for today. Here are the numbers that came out. Microsoft beat earnings, but barely. They were reported $1.46 versus $1.38. The real shocker here was Tesla, who had a monster earnings announcement. I'd like to see what they actually, what the numbers entailed, but the estimates were losing 49 cents per share. They came out at $2.18 profit. They're actually making some money this time. Unbelievable. You have Align Technologies with a colossal miss, but really everything is about Microsoft and Tesla today. Have you had a chance to look at those, Sam? Any thoughts on either one of those?
Oh, I mean, listen, I feel like Tesla's just like its own entity, right? I mean, it's completely doing its own thing. It's crazy. The hype's there. But I mean, I just look at this right now and, you know, we've had that spike. We peaked at like, what, $1,700 after the earnings right now. Yep. I don't know. I'm licking my chops having a stab at, you know, shorting that thing a little bit higher, to be honest with you, you know. And if I could try and get some nice options plays on that, absolutely. I mean, the thing's so grossly overbought. And again, rather than shorting the stock, it's one of those things I'd like to take the option on. For me, like the rally into it, you know, the buzz there, you know, it just, to me, it's just like, hey, man, the move's already happened. And especially the way this thing's been rallying as well. I was saying this weeks ago, if you're already in this trade, great, you know. Yeah. But for me, it's like that final push. And what I'm not yet seeing, and it'd be interesting tomorrow, is, you know, for me to get some continued belief this has got a bit more upside, it needs to break that 1800. And right now, you know, you're looking at the pressure that's coming back in on the NASDAQ itself. You know, I don't think that helps it. I know I'm more interested, though, if I was going to be looking at things, you know, on the short side, more to Microsoft, really. Because I think with the bigger price weighting it has with the NASDAQ, and I see a little bit of potential, you know, weakness in the NASDAQ at this stage in the broad market. That, for me, would be the safer bet on the downside right now.
You know, there were a couple questions that came in, and I'll show the viewers this one. Here's Microsoft. You can see the big hammer down here, just that 5-minute candle brutal on about 3.5 million shares in 5 minutes. There was a question that came in. I can't remember the gentleman's name. Apologize for that one. But it was dealing with who's going to have the bigger impact on the markets tomorrow, Microsoft or Tesla. Without question, guys, the headline will be talking about Tesla, but the impact for our markets, what is going to be the pull, will be Microsoft. As Sam pointed out, it's the weightings right now. Tesla is less than 3% of the NASDAQ 100 weightings, whereas Microsoft is over 11%. So it'll be a much bigger factor with regards to overall market. I mean, this is the big daddy here is Microsoft. We talk about the number of shares in the billions. There's Microsoft in the after-hour session, down right now about 1.18%. I'll bring up Tesla. You'll notice a line on my chart here. I am currently short Tesla at $16.95. I had a limit order in there, and you saw it spiked up. It actually fell 100 points in my favor at that moment. Within 10 minutes, it was basically a 100-point gainer. Pretty nice to be on the side of that winning trade. But I'm still in it. I'll probably hold it until tomorrow morning, or unless I get a big drop here in the evening session. Now, Sam, when we look at this earnings announcements and all the numbers that are coming on for earnings, anything surprise you? I mean, the number I read as of yesterday was like 78% of the companies are actually beating earnings expectations, which to me, honestly, is a huge shocker.
You know what? It's a great question. I'm always shocked, and I hate to be the man who's always kind of pouring cold water on things, but yeah, it's a shocker. For me, absolutely, especially because of like the fundamental and the economic environment we're in as well. But I mean, this is the thing, isn't it? Markets, just when you think you got it figured out, these things come out, and it's almost like there's a delayed impact of the coronavirus, you know? And I think that part of it is over the last couple of months, if we want to look at the bigger picture on here, the massive social picture as well, is part of me's not surprised to see these companies, turn in earnings on here. I think people are getting back into normal. So look, tech companies for a start as well, IT, streaming, the tech is building up. I mean, look at, how probably Zoom's been benefiting from this, Microsoft, Apple, all these guys. Forget about from a consumer, retail perspective. Let's look at from an actual commercial business to business perspective. There's a massive demand for tech. There's a massive demand for IT right now. So I'm seeing it. I'm still surprised by what I'm seeing in Tesla. Don't get me wrong, but I've always found with earnings, there's kind of a delayed effect with it. So, okay, maybe this is just kind of, coming back off this whole relaxed thing. Oh, economy's getting back to normal. I mean, the rebound we saw, in the market from March was pretty amazing. But again, not too surprising to somebody who's been in the markets a while. So I feel that right now, we're seeing more of a lagging effect of, people trying to get back to some semblance of normality. I think next earnings is going to be the real tell for me, because I think what we're seeing, like I say, especially in this tech sector, is more of an impact from the desire and the need, not forget the desire, the need for tech in these new working environments. I mean, companies are shifting over right now. Everything's basically work from home, you just go on Amazon, I wanted to buy a new webcam just the other day, and prices have soared, pure supply and demand, because everybody wants the best webcams, because everybody's doing conference calling. So yeah, in this tech sector, kind of not surprised to see it, but Merlin, I'm going to be more interested in the real figures as the back end of this year comes. And I don't want to be the bearer of bad news, but I don't think really this economy's factored in the longer term effects of coronavirus. And as we're seeing more cases, more spikes and so on, that is without a doubt going to have a bigger impact on the economy, and in turn a bigger impact on the companies themselves.
It is, but I have to, take a step back myself there, because I actually thought Q2 earnings were going to be the abysmal misses. I was really anticipating there being some colossal misses on Q2. Right now, we haven't had anything like that. Now, I'm pretty sure once the retailers start to come out, your Kohl's and your Macy's, your JCPenney's, yeah, those are going to be just appallingly bad, and the airlines and travel companies. But everything else seems to be just dragging this market up. And of course, when you have the talk about another stimulus package by our government, it seems like the odds are much, much higher that this S&P is going to be ripped through to all-time highs. Yeah, at some point, I agree with you, Sam, that chickens are going to come home to roost and this thing's going to come crashing down. But I'll tell you what, with the big stab I took at it, I'll end up losing probably close to 70 grand on this trade, where I was in. You guys have been asking about the puts. I've been unwinding those puts because I can't sell them all at once. I have so many of them, I can't unload it, or I'll completely move that market, because there's not a lot of liquidity down there at the price strike I'm in. So I'm scaling out of that position. But all in all, unless there's some major crash in the next week or two, I'll probably end up losing close to $70,000 on that trade, based off that same assessment that the next quarter's earnings are going to be so bad. And here I am getting smoked for it. It's all right. It was factored in the original plan, but I have to say I am pretty shocked to see how many companies are doing better than expected. And you and I know very well that what they've done is they've all lowered their forecast. So that bar is so low, it's easy for them to get over. But a company like Tesla today reporting $2 per share when they lost 49 cents the previous quarter, that's pretty impressive.
And also, there's a few different ways to slice the bread when it comes to crunching these numbers, right, Merlin?
Yeah.
I mean, the other way, I've always said this, all right, earnings is great after expenses, and when you look like the EBITDAs and stuff on these things, it's like, well, how many layoffs have there been? How many expenses have been cut to make them more profitable as well? And in the long run, that is going to be a delayed effect, because if they're making cost cuttings over here to actually increase their profitability over here, on a short-term bump, great, but on the long-term impact of that, as jobs are being lost, that's why I really want to see how this plays out. And it's very easy to massage those figures too. For me, one of the real tells is also, that's why I pay a lot of attention to the Russell, as well. And like you've seen this continued weakness in the Russell, as something I like to trade as well. And for me, I think that gives us a better tell of things, So I agree with you. I'm really interested to see, the Kohls of this world, the Targets, how's this retail sector really perform? Because I'm not hugely surprised by the surge in some tech, but Tesla has definitely got me. And even after all these years, I know the market will never cease to surprise you. You've got to go into having no expectations and just accepting everything, right? Yeah. But, another way I'd like to look at this as well from a price action perspective is, I like to also, most of my guidance always comes from what are the big boys doing? What's the NAS doing? What's the Russell doing? What's the S&P doing? Because, I don't care, even with the price weighting, short term, you're going to see probably, a bigger correlation between like the likes of the NASDAQ with Microsoft, but in the long run, when it all goes and it's risk off again, everything starts to go. And that's why I feel you get the clues by really studying the price action on the stock indexes as well, which I think we should take a little look at too. Yeah,
sure. We'll definitely look at that. What do you think that might look like? I mean, at this point, we have the whole COVID-19 thing, right? We went into quarantine, went into lockdown. I mean, we're still locked down here in California. Gyms and hair, all this stuff's closed. Certainly, there's going to be a major impact on some of those businesses. Initially, I thought that would bring it down. And then, you have government putting in trillions of dollars, you have the Fed putting in trillions of dollars, backing all the corporate bonds and debt and all that stuff. What do you think it's going to take for it to have that, holy shit moment where it just collapses, where everyone just says, I've had enough. Because right now people, I think, are in massive paper profits, right? They don't actually haven't made anything. They're paper profits. And a sudden knee-jerk down could cause them to sell. But I tell you, the longer this goes on, I keep shaking my head going, I don't know what will bring it down. I don't see earnings impacting it. I don't see the Fed stopping their buying program in any way, shape, or form. They'll keep doing it. I don't see the president's administration doing anything that would threaten these markets from continuing to go up. Matter of fact, they'll do reality TV show type tactics, which will keep pushing the market up. What's it going to take? What's it going to cause the major crash?
It's a wonderful question, isn't it? I mean,
to put you on the spot.
It is. And if I really knew, I wouldn't broadcast it anyway, because I'd be front running everybody.
Yeah, right.
Just jokes aside, I mean, it is a great question, and over the years as an instructor, it's incredible how many people I've seen suffer because they're always trying to pick the top. And you've got to remember, we talked about this on the show before, the equity market works differently. It inherently trends up. And any whisper of good news, any whisper of salvation, keeps some extra air in its balloon and keeps pushing it up. So what could be that? I mean, I always have a theory that, some of the biggest players, some of the big banks, some of the big institutions, I'm talking the biggest of the biggest, not your average hedge fund. The more I think coronavirus, here's my theory. I mean, let's just put it out there, right? And this is just not to make something up. I always said this, when this market turns, when it really turns, you're going to get a second bite of the cherry. You've seen this how many times that first initial sell-off happens and it retraces, then you get the real move to the downside. Mm-hmm. We're way beyond a dead cat bounce, right, with this. We've had a full great recovery here, albeit not a complete recovery. But for me, I think, the big boys, we know this. Back in 2008, the big players, the big banks, they knew all the crap. They knew all the shit that basically they put in the system, and they were already getting themselves out as best as they could. They had a little bit of a leeway before it came out to the public. Let's face it, coronavirus, no one knew. Bang, that came out. Right. It took them, sideswiped them, just as much as it did Joe Blogs on the street as well. I feel that what's going on potentially here is this run-up is just another way to build some hope into the market to get, the powers that be, the biggest players in the market, another opportunity to unwind as many of those long positions, sell to as many other people as they possibly can for the next leg down. And I think it'll probably come hard and fast and swift, and no one will really expect it. Yeah. It will happen when you think everything is great. I think all I just see here is an opportunity that on this way, as everybody's been buying back into the market, well, who the heck do you think they've been buying it from? Yeah. I don't want to be the conspiring mind, but, to me, I look at the market from a logical sense. And I think, hey, this isn't me being a rainmaker and saying, end it right now, get out of all your positions. But, man, you've got to be tight on these things. You've got to start protecting your positions in this particular way. And, I would just say this to anybody. Wait for some decent signals that this thing's going to turn, because it hasn't yet turned. The uptrend has continued. So what do I think it's going to take? I mean, to answer your question, and that's all the background stuff. But from a foreground perspective, I want to see some bankruptcies. I mean, I don't want to see bankruptcies, but I need to see some of that. Is anyone going out of business? What are the long-term effects? The bailouts are keeping all these companies in, the business loans, stimulus checks. We haven't given, it's just like 2008, man. Mm-hmm. It's like we're artificially propping up the market all over again. And right? That's all that's happening. What is the stimulus checks? Billions, trillions of dollars. We're just doing it on a complete national and global scale now. When are we going to start seeing some companies actually going under? When are we going to start seeing the bankruptcies hit? That's what I think is going to generate the fear, because we're all nervous of the long-term effect, but we're not yet seeing the long-term effect materialize, right? Yep. And I think we got to hear some big names go out of business. We've not really heard that yet, have we, Merlin? There's not been any of those household names, those retailers saying, hey, we're done, coronavirus has killed us. Yeah, mum and pop shops, but nothing else. And I think that's what it's going to take to really put the fear into the market again. Yeah, there have been a few that have disappeared, but you're right. I don't think it's anywhere near what it should be. Question that came in, or comment, David says, fourth Q in a row that Tesla's been profitable. Their expectation was they were going to lose 49 cents a share, if I misspoke there. And a lot of it's interesting, the comments coming through right now about politics. And yes, that could be the one. Jeff says, do you think Trump will let the markets drop before November? I assure you he's doing everything in his power to keep this market from dropping. You want to end on that high note as you go into election. But if we get a different administration, and I don't want to hear all the hate about one candidate or the other, it makes no difference to me, a change in administration will generally usher in a lot of uncertainty, whether it's Libertarian or Biden or who knows who it is.
any change could be that catalyst, because Trump has been, the bull in the China shop for in many cases with regards to the markets and global diplomacy. That may all change here if we get a different administration. So yeah, certainly after November, that might be one of the big events. But boy, I tell you, I agree with Sam. I don't think you're going to see the Fed back off anytime soon, because they don't want to be the ones left holding the bag at all. They're just saying basically, hey, we will keep pushing this market up. We'll print to infinity. I mean, he was on 60 Minutes. Powell said, yeah, we will just keep printing as much money as needed. So it's basically infinity and beyond. It's crazy.
It is, and it's more probably like a catalyst effect. It's like, we've got to start thinking, and that's a great point, by the way. Under this current administration, going into the last quarter of the year with the election and everything, our current administration is going to keep as much buoyancy in the market as possible, and that without a shadow of doubt. So that's a huge thing too. But it's almost like I feel that what's going on is we're waiting for what is the impact of what's going on. Does that make sense?
Yep.
So here's coronavirus, here's what it's doing. Let's see what's going to happen. How's it going to affect? What is it going to be, that knock-on effect? And I think that when we see some real long-term effects come to the surface of all of this, that will be basically the stimulant that will drive this thing back to the downside on here as well. But for now, I mean, I'd like to echo, I'm just treating this market for what it is. It's still in an uptrend, and I'm just trying to be very picky on where I buy and where I sell. And like yourself, I was, guide leading my trade room this morning, and I said, hey, you know what? I'm happy to short these areas intraday. I'm waiting for these clean breaks. But I tell you, any short positions I take, I'm going to be smart on my profit taking, and I'm going to consider getting back long again at the appropriate time. So I'm in that kind of neutral phase, just playing the extremes on a short-term basis right now, Merlin.
It's a good place to be. Good place to be, that's for sure. Let's see. I had a ton of stuff here. For Gaillard, I know we want to talk price action, so let's look at some charts and analyze some stuff. Gaillard at the very top of the program said, could you and Sam please look at the Euro USD as it is on a 81-week high? All right. Well, I can bring it up over here. If you want to share your screen, you're always welcome to do that too. EURUSD is what I'm looking at here. You've got that Euro USD. Yeah, this is a daily chart. Let me go to a weekly time frame here so you guys can see that one. That downtrend, I would say, is officially over on the Euro US dollar, or that probably in the last week or two would be officially over. But incredible strength here at 115.69. What's your take on it?
Oh, yes. So Euro USD, I mean, I remember, just looking at this a couple of weeks, I had a great short on it, and then that played out, and now we've rallied again on here. So let's go take again and have a real look at this. I mean, again, I'll pull up my screen on here again, Merlin.
Yeah, so feel free to share anytime. I'll switch it over.
You can see this. So, oh man, I've just kind of lost my controls here to do so. So there it is. I'm so used to using so much different streaming software at the moment.
Well, yeah, welcome to my world, doing the whole switching and everything.
Are you seeing that?
Yeah,
right
I got it. Perfect.
Yeah, I mean, look, let's look at some basic price action on here. I mean, you've got to look. I mean, I'm starting with the monthly chart right now and looking at this, and I've said it before, and I've said it again. When you look at these kind of buy areas, these wholesale areas, demand areas, what you really want to call, and you look at the price extremes. In fact, if you go back and look at this area here, where that last grout selling in 2018 hit from, I mean, these were the key areas that I was looking at, and when you actually look at this, not really a surprise. Look how many times, if we zoom in on the chart right here, let's just bring up my magnifying glass, but look on here how many times, we just tapped in this area. Look at this. I mean, talk about and again, I don't go old school with my technical analysis, but I respect it, Merlin, enough, and you can see the amounts of buying pressure from these monthly candles. And well, it's all right. So, you can see, look at the buying pressure that was coming in as we came deep into these monthly areas. And, again, think about what the price did the last time it was here. From a technical point of view, and remember, the currency markets, guys, they're not like the equity markets. They have my little fly buzzing around in here. There we go. Got him. Like Mr. Miyagi there with my chopsticks, just not as graceful.
Hey, lucky you. I killed a mosquito live on air the other day, Good.
There you go. I tell you, they get in somehow. Anyway, just buzzing around there on my light, attracted to the light. But yeah, we were at the lower end of the range, and I'm always about I'm a reversion to mean kind of guy. So if you look at about halfway, I do think we're at a point here where we're going to see a little bit of challenge. This 116 to 118 area is about halfway between these extremities. But again, when you look at this market and you look at the price action, we're just down the lower end of the range. As we know, the dollar hugely overbought. You've got that thing has had its tremendous run. There's there's plenty of downside opportunity on the dollar. So, and one of the things I'd be interested this month to see how we close, because if we look consecutive, we have been closing higher. Let's look at this. Just look at this. And again, Sam, you're not on a 5-minute chart. No, because I can't see the picture on that. We have consistently been making higher closes of over each monthly high. We closed higher than this month, and this month. And that's a big thing. We're taking out monthly highs right now. So I think, we should expect a little bit of a pullback. But at this rate, we are in an uptrend. We're making monthly closes higher. And I would see this thing pushing to at least about 117.50. And we can break through that. No reason why we're not going to get back up to the 120s, 122s on this thing. So I'd be happy to wait for a pullback on this thing, especially with that extra dollar weakness that potentially we're seeing on those long-term charts. The question is where? I got to say near term, let's absorb a little bit of this. But for me right now, if I was looking for a pure trend trade on this, I'd be interested in this kind of area around that 114.10 to 113.67 for a nice pullback there to see if I can get a little bit of upside on that. But I do want to see a pullback first, Merlin.
I like that 116 line that you've got drawn. I'm going to steal the screen and share mine, guys. I'm looking at the dollar index, which of course we know is weighted towards the euro. This dollar has been in a pretty aggressive fall from 100 down to 95 right now, actually sub 95. And you notice this low that we have, right? I'll zoom out a little bit. Again, I'm on a weekly on the dollar index. And that week of the 13th of March, when we bottomed out, we had a low on this bad boy of 94.65. Ooh, I wouldn't be surprised to see us get back to that one, and that would coincide with that overhead supply level that Sam was looking at on that Euro USD. So all in all, I agree. I am bullish on the Euro, although I do think it might have a little bit of a pause.
Yeah.
For me, the big story here is the dollar. I mean, you've seen real wild swings in the dollar, and once it breaks this fresh low from March, there really isn't much there. I mean, all of a sudden you could find the dollar back at 90, and it kind of makes sense. If you think about it, why would the dollar be falling? Well, you've got the Fed basically buying all the bonds, backing all corporate debt. So yields will start to drop, and that would bode well for getting out of the dollar, right? The higher the yield is, that means people will do the carry trade. They'll buy the dollar. That'll drive the dollar price up, and they get that carry trade. But there's no money in it for them, so why are they going to buy the dollar? And that'll continue to cause it to sell off there. So good question, Gayer. Yes, Kanye for president, right? Oh, my God. Yeah. If that guy becomes president, please, there's something seriously wrong with America. And if any one of you guys believes that you would vote for Kanye West, please just let me know so I can block you from this channel for here on out.
I'm still waiting for Dwayne Johnson to nominate himself. Maybe not this year, but man, next few years.
I would much rather. At least that guy's not a lunatic. I mean, he's an actor. He's funny, and he's somewhat intelligent. Kanye West is a bipolar sociopath.
Why don't you just tell it how it is, my friend?
He is. Look, I had this conversation with a friend of mine. This guy he does a lot of what Trump does, which is he creates a sensation. He creates an urgency. He creates a panic. And then he gets people so outraged that every media outlet, good or bad, talks about him. And then he'll backpedal a little bit. The storm calms, but he's got all this free publicity and attention. And then it is over and over. Kanye West is exactly the same. That guy's a schmuck. And he's no talent. He uses no guitars in his music. Says he's better than the Beatles. Beat it. Yeah. All right, sorry.
Hey, listen, you're talking to an Englishman. I'm not going to disagree with you on that Beatles statement, right?
Let's go into another one, which it's going to be challenging for me, I'll be honest, and that's silver. Multiple people here said, silver, what do we do with silver? I'm going to bring up the SLV chart. We can bring up silver futures if you guys like. But silver has gone just absolutely ballistic. This is a weekly chart, by the way, and we did look at this one yesterday. It's continuing on. It's up, let me go to a daily here. It was up another 10% today. And you have three breakaway gaps here. I'm not exactly sure because I don't live in this area. I know that some others do. So for those of you like Brendan who are real deep in the minerals and metals area, let me know what your thoughts are. But technically, is there anything that you can get from silver which is just going stratospheric Bitcoin-ish?
I mean, listen, that thing's been undervalued for a very, very long time, right? And I know that, but it's like I've been trying to wait for it to catch up to gold. There's always been a real correlation between the two. And again, I will always just tell you, if I don't have the answer to a question, I've just brought up my silver chart right now on the monthlies here. If I don't have the answer to a question, I'm not gonna kind of put it in there. I mean, we had this surge, it's happened. I mean, it's also happened in gold as well. Fundamentally, my reading, my studying, I'm not seeing any kind of reason why it's happened now. Am I surprised? No, by when you look at the location of how cheap it is. I mean, let's face it. But, the simple fact is, from a technical point of view, again, look what it's doing, continually destroying previous monthly highs. This needs an absolute damn to stop it. And I know that the OTA mantra over the years was buy low, sell high. Sometimes you got to buy high and then sell for higher, right? Yep. And we're still relatively high, and part of what we're doing in my company is saying, look guys, we'll always want to get the best deal. We always want to buy as low as we can, but we've also got to give ourselves an opportunity to join a trend and find a way in. Right now, would I buy at this moment here? No, but what I'm going to look at is I'm going to say to myself, man, I am seeing a lot of potential movement in this area here, right? Lots of wide open space. I've marked it off here. I don't see any real good quality selling pressure of any real impact until this 27.17, 28.54 area, Merlin. All I see to the left on the monthly chart is kind of junk, and we blow through it. How many signs do you need? The market's trying to push higher, and now we've established a fantastic new base from that. So for me, I don't see any reason why over the next coming months this couldn't continue as well. Maybe as well we're seeing a little bit of kind of the smart money moving into the precious metals in preparation for what we were talking about earlier on the show, the Armageddon that's to come. That could be the fundamentals behind it. I don't know. I'm not going to waste my time trying to read between the lines. I'm going to look at the chart and say, what am I seeing right now? And again, with this kind of ballistic moves on here, the biggest gap closure that I can find, I'm going to try and take it right now. And any of these gaps that close, that could be really interesting, as great possibilities. I'd even say this, if this was something more in your retirement account where you're not going to have to be, particularly refined on the entry, I'd just say, hey, wait for a down day, try and get it near one of these gaps and add it to your portfolio rather than trying to overtime the entry, because I don't think at this kind of price, if we get a bit of a pullback, it's going to be a terrible thing to have in your longer term account. Would this be a market I'd be trading? Heck no. But is it a good one potentially, the ETF in your retirement account where you don't have to be, quite so precise on the entry? Absolutely. I just want to see a little bit of a pullback. Ideally, in an ideal world, Merlin, love to see it back to about $18 and load up a little bit then, because this does need a bit of a breather. But one of the things you see in trends, guys, is sometimes the best way into a trend is after the pullback. Let it have a breather, and then the true move will happen. That's my outlook on that, Merlin.
Yeah, I agree. I think you're right, and I think there's a good degree of FOMO if you're missing out on the metal spaces. Obviously, we've seen gold that was noteworthy today too, getting up above 1,800, almost a 1,900 today. This is that historical flight to security. There is a bit more utility, industrial use-wise, for silver. So there's a lot of applications there. Certainly, you could make the arguments that a lot of the solar energy is using silver in the materials and the construction. So that could certainly be a factor. I've been hearing about supply issues with silver as well. Even though it's abundant, it's just not able to keep up with demand, which is another reason why you're seeing this. It's very difficult when we see a chart like that to make plays off it. And I love that the chart that Sam has there. I do think, though, that if you look at this on a weekly basis, there is a level right around 2350 that would be that next line in the sand for me. Depending on what you're looking at, I don't think yours is showing a gap on there. Mine actually shows there we go. Right there, you got the kind of a double top. While it's a tested level, it's been repeatedly tested. That would be my next target for maybe some slowdown on it. I mean, it's not that far. It's $1.50 away. It moved that today, so it moved $2 today, so it could easily hit it tomorrow the way it's moving. But this is one of those ones where the media gives it more attention, gives it more hype. There were a lot of headlines about silver today. My guess is probably Robinhood. This is probably the most added thing in the Robinhood space today.
Right.
You know what?
Absolutely.
Did I ever show you that? There's actually a site that you can go to that will bring up what the Robinhood people are holding. I thought maybe that might be funny. Let me real quickly bring up the Robin track and see what their users are doing on SLV. Bear with me as I bring this one up here, guys. It's kind of comical. All right, let me type in SLV. I'm willing to bet you this thing has just been piled on by Robinhood traders over the last couple days. Yep.
What's the name of the website, Merlin?
What's that?
What's the name of the website?
It's called robintrack.net. Robintrack.net.
Okay.
And you can type in symbols. It's great because normally when you see something go parabolic, you'll see the buyers of Robinhood users are soaring into it. And guys, look at the past week. Oh my goodness, this is hilarious. Look at the parabolic curve. It's basically gone from, in 2 days, you went from 15,000 users held it in their account to now almost 20,000 users holding it in their account. And that's just a period of 2 days. 2 days it jumped, what is that, 30%, the number of users that hold it. So yeah, not that that's causing it all. I'm sure there's many, many more factors to it, but I thought that's kind of funny to look at.
That's a great website. I'm going to have some fun with that over the
Oh, it's almost every single time when you see something that's up like 30, 40%, you just look there and say, oh, gee, Robinhood traders. Tesla was a good one. When it dropped so much, all these Robinhood guys just bought in. You could see a massive spike on it. All right. What else is there? Let's see. Let me look at the list of questions because I saw there was a few that were coming through. Silver lockdown update. Silver, good one, Tom, with the silverware jokes. Let's see. There was a couple questions. Merlin and Sam. That was from Koja. Okay, we talked about silver. Maybe want to take a peek at gold here real quick too. And then I'll have a peek at gold, Sam, and analyze that one while I go through here and find some more questions because there's a bunch that are coming through here.
Let's take a look and see where we're at with gold. All right. Now this is interesting on here. So I'm going to just bring my screen back up so everybody can see that again. Okay. And here we are on the monthly chart of GLD right now.
Yep.
So
whew, gorgeous.
Now this for me actually lays a little bit. Look, there is a level of correlation between silver and gold. We can't ignore that. Okay, and it's almost like it's playing catch up. But you look at GLD right now and where we are, and what I'm seeing is what you were just talking about. If we go back actually to the SLV chart for just a second, this actually lines up real nice. What I'm going to go ahead and do is go back to the SLV chart real quick. And I love these areas, Merlin, that you just pointed out. This area here, we can see it on the weekly chart. I love those areas where you gap and then you continue. They are major targets. They're awesome areas too. So I couldn't agree more. They're one of my favorite trading opportunities that I find, those areas. So as we're coming into that, for that pause, that lines up really, really nicely with where we are on GLD right now. Because on GLD, if we actually take a look at where we are, we're running up. We're getting much closer. We're actually getting closer. I'm going to go to the monthly chart. To these highs of, basically the last decade, right? You've got on this area here where we're running right back up into this, and there's going to be some, attention to that. So that ties in quite nicely, again, because I feel the best chance to get through a major level like this is to absorb some of that selling pressure, get the pullback, and then get long on this. So again, I think with the uncertainty that's going on in the market, I have no reason to believe that this uptrend isn't going to continue on this. I really don't. It's quite a wide zone. So when I see a wide zone like this as well, you see the width of this zone, that just means it's like wide open space. I don't care too much for candle wicks. They're just vacuums to me. They're open space. So I would not be surprised to see us push a little bit deeper in this, absorb some of those sellers, and again get a pullback, and that would tie in very, very nicely with what we're seeing on the silver market right now. And you might miss the boat on this, but again, this cluster of activity that I'm seeing on GLD in this 170 area as well would be the nice pullback for the next leg of this upward trend after we dealt with that supply. So SLV and that gap at that area of supply you saw on SLV ties in very nicely with those highs we're at gold right now. Let's see those both correlate down, and then we can have a nice opportunity to get back long on these things. Yeah,
I love the double gaps on that. To me, those gaps are going to be filled at some point. And you got a lot of gaps.
Absolutely. I mean, they are a beautiful thing. They really, really are. And I always, when I'm looking at these areas, look how wide that area is. That's the monthly area, Merlin. I mean, look at that. There's all that potential space for it to shoot through and everything. I mean, going back to the left, I mean, it is huge, There's a lot of mess there. That's why I don't like to get too much into the weeds of these small time frame charts. I mean, not that daily is a small time frame chart, but looking at an ETF when it can gap every day, it's tough. That's why I tend to typically analyze, the commodity markets, on the futures charts. This is a little bit easier, but I know there's a lot of people on the show right now looking to just add equity into their accounts using ETFs that way. So it's just as good to do the analysis. You just want to stick to those weekly charts. So pullbacks on this I'd be waiting for before we go a little bit higher. Yeah, I think that you got it mapped out. I think that 170 is a pretty good mark to be buying back in. It certainly got a little bit extended here, a little bit of greed stepped in. Don't worry, wait for a little bit of fear to kick it back down and then buy back in at that point. Absolutely. So did you find some more questions for us there?
I did, but I'm looking at the clock here, and I want to give you a chance to tell our viewers about your new thing, because I know you did a soft launch. I know you got a room going on now, so maybe you can tell me a little bit about Because you haven't even filled me in. I have to be like with all the... I'm supposed to be insider trading here. I should know these things already, Sam. Tell me what's going on in your world, man.
All right. Well, you know how I work with all of this. I didn't want to kind of like jump out ahead of time. I didn't want to kind of like, start. I wanted to do this right. And in fact, what I'm probably going to do is I know we've already agreed I was going to come back on the show again next week as well. So, this is really good. I might even just bring on my partner in this just to say hi to the world as well, which would be kind of cool.
Sounds good to me.
He's a little bit more reclusive and stuff than I am. My company, Stockability.com, is great. Now, what we just did is this. I'll just tell you a little bit about it. So I was on Twitter and we were just kind of basically, teasing it. You and I were talking for months and everything. I wanted to do it all right and stuff. And we were almost so close and finished there. And then we were like, people were reaching out to me, Merlin, going, Sam, I want to get early and I want to find out what you're doing. I mean, it was so humbling, Merlin, to have all this interest from it. And so we were deciding, this would be really cool. I mean, I'll make my goal very, very clear on here right now. My goal is to create, the very finest trading, financial, investing education in the world, and do it in a way that I always wanted to do it. And I thought, one of the best ways to do that is to take, people who've had education before and, and followed us, let them help me create the very, very best education out there. So we did a closed launch. All the people who were interested, we said, hey, look, I did a couple of webinars 2 weeks ago, and, we got everything together, and I introduced them to Dan. I introduced them to the methodology, the goal, the vision of Stockability. And, I said, listen, I'd love you guys to come on and be what we call founding friends and help us, in the next 2-3 weeks, just before we go fully public. And we're going fully public August 8th, okay? But before we go fully public with this, help us make this as amazing, solid, robust as we possibly can. And I was so overwhelmed, Merlin. I mean, I've got, a lovely amount of students, who joined us. We've got 6 hours of in the trade room every single week. We've got our first class doing our foundation class next week. Then we're doing our options abilities, income abilities, and some of the cool things we've done is like my income class. I've actually combined Forex and futures into one class, which is really, really neat. Our options curriculum is to me so simple and so unique. I've not seen anything like that. We're covering, futures on options, which not a lot of people talk about, wealth management, IRAs, the lot. And, we've got this amazing community where we're using real-time technology now. So we've actually also, Merlin, created a virtual trading floor. So on these little things, everybody's in touch on their phones, on their desktop apps, and we're bouncing ideas off of each other, sharing charts. I mean, it's been busy, but oh my God, humbling and overwhelming. So, and if any of the founding friends are listening right now, thank you. I did a session with them this morning. It's not been that much fun this week because there's a lot of chop in the market, but it's been absolutely amazing. So that's ended now, the closed launch. They're testing all of the website with us, getting everything ready. We're going public with it on August 8th. But what we are doing is a pre-launch campaign as well, where people can actually earn free education in Stockability as well, which is pretty cool. And if they're interested in coming part of that as well, and I'm going to have more details about next week when I come on the show as well. But in the meantime, if anybody wants to reach out and find out how they could, help us spread the word and actually earn free education with Stockability, they can email me, sam.e@stockability.com. And I believe you shared that with everybody as well, Merlin. So that's Stockability, your money, your move. That's it in a nutshell, my friend. And next week, hopefully, I'll introduce you to my partner, Daniel Bustamante. He comes from a recent, hedge fund background, having worked with Schwab's and everything, and, working in the world of finance and portfolio management, institutional portfolio management in the last 5 years, very recent. And that's what I wanted. Somebody who's been on the inside recently, who's really got that experience, can offer a different perspective to the market. That's us in a nutshell, my friend.
Well, sounds pretty exciting. I'm glad it's working out well for you. You always work hard, love the asset, and you love to teach. So Harrison says futures on options. No, options on futures and options on Forex is another one. Not too many people are doing options on Forex or even options on futures, but I think you were talking about options on futures, right?
Correct. Yeah, options on futures, and you've got we're doing a lot of cool stuff on options on ES, a lot of stuff on WTI as well on the oil market. We've got our specifics. One of the things that we're teaching in the companies, sometimes when volatility changes, your outlook can be the same, but the way you go about finding your trade, your deal has got to change. And that's one of the things we're focused on, and Dan comes from an amazing portfolio management perspective. So this is truly about building your business, about restructuring your portfolio for income and wealth, and one of the things that always frustrated me, Merlin, and like you've been doing this for a very long time, more than just supply and demand, and me too. I was like, there's so many rich, wonderful tools out there that you can take to complement what you're already doing. And that's been the goal of Stockability. And people are really really digging that vibe. The only thing we're not doing Forex options because the problem is it's not a regulated market. You're kind of at the mercy of the broker. But again, there's enough, as long as the open interest there's other ways to skin the cat. If you want to do options on the currency market that we are covering, like ETFs, and there's obviously the future. So there's ways around it too.
Nice. I like it. Yeah, and I like that you mentioned that it's not just supply and demand. Yes, there's some one-trick ponies out there that can't even say anything in the trading world other than supply and demand. That's just not in their vocabulary. But yeah, I think everybody's watching this right now probably agrees that trading is such a dynamic, crazy environment that you always have to be on your toes and you always have to be ready to switch. And while supply and demand and looking at buyers and sellers is critical, there are things that we can do to further enhance those areas. And there are actually opportunities you can find when you're not even looking at supply and demand. If you look at what the turtle traders were doing, it had nothing to do with supply and demand at all. Right?
And they were kind of successful.
Just kind of. I mean, there's some of the most famous traders in the world were just purely trend traders. So, for me, it was critical in my early days, and certainly as I progress even now, to understand those methodologies so that if I do see an opportunity where, there aren't any great supply and demand zones, but I can join back into this trend based off of some other tool or resource that's helping me identify it, great. So you should all have that different tool sets and skill sets out there so you're not stuck with one-dimensional trading as some people are.
Oh, it was so funny, Merlin. Like I was just doing the trade room earlier this week and we were in there and, we just weren't getting that perfect entry that, on a trade. And I was like, well, here's a key level. And if this breaks, we'll take the breakout. And they were like, breakout? Like a dirty term. And I'm like, yeah, but guess what? Some of the best traders I know are breakout traders, If you have a rule for it, then that's fine, but you have to know when and how and why you're going to use every tool. And I just said, it's like, building a house. You don't build a house with just hammer and nails. There's many other tools and, each tool has its job. And hey, listen, I'm not knocking anybody who wants to just do one thing and one thing alone. But I think in these, well, yeah, you are. All right. Maybe I'm a little bit, look. Yeah, you know what? At the end of the day,
I'm not.
My attitude is this. I get it, and I have, I'm with you, on that. I've taken a very kind of step back stance in here, of it all. I'm like, I just want to offer something a little bit different. Like what I believe in right now is this, that if I was going to go out there alone and I was going to do this, and I said this on the webinar, I don't want to just basically rehash all the stuff that I've already been teaching over these years. Man, I was restrained. I couldn't teach these things because it was all about, hey, you've got to do this and you've got to do that. Like today in my trade room was amazing. We ran 15 minutes over. I got no one breathing on my neck saying, Sam, wrap it up. I want to give my students more. And that's where it's been really, really nice, And I'm now at this point. It's like I've seen so much and done so much. I just wanted to bring something completely different to the table. I know with my partner Dan Bustamante, he brings that. I can reinforce, for me, the way that the supply and demand was meant to be taught, and and that excites me. And like I say, my Dan's saying, I'm not going to take credit. There's many ways to slice the bread. In this game, there's many ways to slice the bread.
I agree.
And not everybody digs just doing supply and demand, Some, like I say, some of the best traders I've ever met, awesome breakout traders.
Yep.
So not only are we teaching people strategies and simple rules, I'm trying to train people how to become traders and define their own way in the market. And not just as, oh, you'll figure it out. It's like, oh, let's put this tool and this tool together, this tool and this, and then let's road test it and help you build a plan that works for you. And if you want to just follow the way I do it, that's great too. Dude, I'm super excited. My goals are big. I believe we'll hit them there. And I want to thank you for giving me a lot of support on this as well, and continuing to give me that support, because it means a lot to me and my partners and my team as well. Because I'm not a one-man band in here. Well, we did this, we done it right. We took on our first employee just on Friday as well, because already we're overwhelmed. So
nice.
It just means it's a better thing for our students.
Good to hear. And I see you got a lot of people that supporting you in the chat as well, saying that they enjoyed their Stockability as well. So guys, I'm going to bring up the screen over here. There's their Stockability website. It's pretty basic at this point, but if you want more information, you can go to stockability.com, fill out there. I also have Sam's email on his screen right now, which is sam.e@stockability.com. You can contact him and get more information on that one. Sam, thanks so much. I look forward to our trio of contact tomorrow, or not tomorrow, next week.
Oh yeah, we'll have to. Here's the thing, right? I'm going to give you a sneak peek, right? We have to lay Dan up, so we have to feed him. But once you get him going, he gets going. All right, so we'll have some fun with him next week. Okay.
Looking forward to it. All right, buddy. Thank you so much. Have yourself a fantastic day, and I'll talk to you soon, my friend.
Thank you, everyone. Thanks for tuning in. Have a great day, Merlin. Thanks, buddy.
Right, take care. Guys, that was Sam Evans. Stockability.com is his new company out there. It's been a long time in the building. I know he's been diligently planning this for some time. He even kept it a secret from me. I had to find out like you guys did through the regular channels. Anyway, I hope you enjoyed his analysis today. Got just a ton of stuff with regards to markets and earnings and silver. Got silver and gold, just phenomenal. To my friend Katie, I was saying it's going to go higher, but she wanted to sell her gold. Well. All right, let's see. That's pretty much all I got to talk about today. Let me go to your earnings calendar and economic calendar for tomorrow. I'll bring that one up full screen for you. Here's what's cooking for tomorrow. It's nothing as big as today. Actually, I haven't looked at the markets in the last few minutes. Let me just check real quick because President Trump was speaking just a couple minutes ago, and I'm curious whether he may have popped this market to the upside, and I think that he did. Let's go 5 minutes. No, it's still just kind of quiet. He was supposed to do a presentation at 2:30, so we're just about to get rollover. It should start here soon. Anyway, let me go back to your economic and earnings calendar. This is what you got cooking for tomorrow on the economic front. Unemployment claims for the U.S. Right now, they're expected that number to stay right where it was the previous week at 1.3 million. Other than that, you got natural gas storage and not too much else. Your retail sales for the UK, which is expected to be at 8.3%. Most are missing the retail sales pop. What's noteworthy here, if you look at the British pound retail sales number at the bottom, their previous number was 12%. Canada and the US were both like negative 20. It was really, 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 really bad. Well, they never got that low in the UK. They were only a 12% gain as opposed to a loss, and they're expected that to slow to 8.3. My guess is they'll probably come out a little bit lower than 8.3, but I'm not a big pound trader, so it doesn't really impact me. It might impact you. Now, earnings. The big stuff's out of the way. We had, your Microsoft and your Tesla today. We'll see how that impacts the markets. There are some big names tomorrow as well. AMD went absolutely nuts today. I don't know if you guys saw AMD's chart. It was fantastic, just ripping to the upside. Intel comes out with earnings tomorrow. You have AT&T, Danaher Corporation, Union Pacific, Total, Air Products. You also have Kimberly-Clark. Toilet paper was in big demand last quarter. Edward Life Sciences, Walmart de Mexico, Ambev, Blackstone Group, Dow, Travelers, and then one I'm kind of curious about, Twitter. It's been in the news a lot of negativity with regards to Twitter and pulling ads from Twitter, etc. So we'll see how they pan out with regards to earnings, but that's all reporting. What I've done now is I'm actually keeping on here for you guys. If you like it, let me know. If not, I'll take it off. When I put the earnings up here, I'm actually leaving when they are reporting, meaning BMO is before market open, AMC is after market close. You can see on the line item for each earning. So Intel is going to be after market close because it's what? 4 symbols, which means it's traded on the NASDAQ. AT&T, 1 letter, which means it's traded on, that's right, New York Stock Exchange. That usually will be before the market opens. All right, any last minute questions, feel free to send those on in. I don't have too much else to talk about here. How much time we got? Oh, for Big Eb, he's going to be upset. We kept it under an hour. Oh, darn. I received a lot of questions underneath the chats to the videos, which was great. Thank you guys so much for those. I was going to try to bring some on today, but I figured, I'll just wrap it up because I don't believe I have a guest tomorrow. I may have a sneaky guest. If I don't, I'm just going to do a bunch of listener questions here. There's a whole bunch of really, really good stuff about market correlations, commodities, and other factors, which I will probably dive into exclusively on tomorrow's show. So that's your chance. If you guys want something I want some answer on the show tomorrow. I want some levels analyzed. Want me to bring up some different charts? Feel free to tell me what they are. You can go out to tradermerlin.com and send it in there. That's an easy way to send in long personal emails if you like. If you want to send in the short stuff and just have the world know your question, put it down below the video on the YouTube page. And until then, I'll get back to you then. Luis, good. I love when you learn something new. I'm kind of curious what that something new was, Luis. But anyway, I hope you guys all have a fantastic evening. Happy trading out there tomorrow. Should be a wild one based off of the Tesla and Microsoft announcements. We'll see how it pans out. Until then, happy trading, everybody. I will see you tomorrow.